The market right now is crazy. It's messy, for sure. There is so much going on. Between trade war headlines, rising tariffs, and political power plays from every direction, nothing feels secure. And that's exactly the kind of environment where we need to stop trying to be clever and start getting strategic. Steve Eisman, the guy who called the 2008 crash, just stepped forward with his take on 3 stocks. I liked what he had to say, so that is our pick for today. He's not panicking, but he's not playing games either. He's not buying the dip. He's not betting on momentum. He's focused on just one thing right now: leadership. He says, until that stabilizes, don't try to time anything. Headlines are running this market, and even the cleanest charts can lie to you. But that doesn't mean Eisman's sitting out. He's still bullish, on the right plays. Stocks with strong fundamentals, unstoppable tailwinds, and built-in resilience. Let's start with the one name that keeps rising to the top: Nvidia. Yeah, it's been dragged into the tariff mess, shaken by headlines, and caught in the crossfire of the US-China chip battle. But despite all of it, Nvidia isn't flinching. In fact, it's already bouncing back. And not because people are buying the dip, because it's building the backbone of AI itself. 90% of its revenue now comes from data center AI chips. Nvidia is the plumbing for the AI revolution. Its new Blackwell architecture isn't just an upgrade, it's a generational leap. And while the hyperscalers like Google and Microsoft are tightening budgets, they're still cutting Nvidia billion-dollar checks. That's not hype, that's power. Nvidia also just committed $500 million to US-based chip production. A move that not only protects it from harsher tariffs but earns it breathing room from both sides of the aisle. Trump also appears to be giving Nvidia space to operate because they know this company matters on a geopolitical level. Eisman sees it. And if you're holding Nvidia already, he's saying don't blink. Don't get shaken out. If you're in for the next 3 to 5 years, not the next 3 to 5 weeks, this stock still has a long way to run. The second name Eisman's locked in on is all about one thing: stability with upside. That's Apollo Global Management. But he's not just looking at the stock. He's focused on Apollo's reset rate junior subordinated notes. These aren't your average bonds. They're paying a 7.625% annual interest rate until 2028. And after that, they reset with the 5-year Treasury plus a 3.226% spread. That means if rates stay elevated, the yield could climb even higher. Whether they get called or not, you win. Apollo is no gamble. It's an investment fortress. They manage hundreds of billions across private equity, real estate, and credit. 13 straight years of dividends, A-rated by Moody's and Fitch. And these notes? Still undervalued compared to Apollo's senior debt and its peers. In a market full of landmines, this is a steady income play that's built to last. And finally, Eisman's third pick is a name you already know: Amazon. But this isn't about retail, it's about automation, AI, and infrastructure. Amazon generated $115 billion in operating cash flow last year, which is up 36% year over year. They're pouring $100 billion into capital projects, expanding robotics across their fulfillment network and, building moats no one else can match. AWS, Amazon's cloud division, is launching its own AI chips and powering the future of computing. Their ad business is actually catching up to YouTube, and the stock is still undervalued, trading far below its historical average on a cash flow basis. Eisman calls it a generational opportunity, not because it's trendy but because it's unstoppable. In a market this volatile, it's honestly tempting to jump around, chase hype, or just sit frozen. But Eisman's message is really clear: don't react emotionally. Stick to the names with structural strength, political leverage, and a plan that actually holds up under pressure. Nvidia, Apollo, and Amazon. Not hype, just power. Don't miss what comes next. Let's wrap up with why these 3 stocks could be the safest long-term bets in the storm we're in. In times like this, clarity matters way more than hype, and strength matters more than speed. These aren't moonshot plays. They're built on cash flow, leadership, and positioning that holds up even when the headlines don't. So if you're tired of chasing trends and ready to build something real, these are 3 of the strongest hands to hold. If you found this breakdown helpful, make sure to like and subscribe so you don't miss what's coming next. We're tracking every shift in the market and bringing the insights you actually need to hear. Drop a comment with your take on Eisman's picks. Do you agree? Are you holding any of these? We want to hear what you think. If you're serious about building wealth through long-term investing, grab our free guide 5-Minute Money Shift. A fast-read breakdown of simple, powerful moves you can make today to position yourself smarter for tomorrow. The link's in the description.